According to Egypt's Finance Minister Mohamed Maid, lingering issues in negotiations for a new extended financial facility are being discussed with the International Monetary Fund. When asked if Egypt and the IMF had different views, Maid responded, and I quote, "We go between points of view when speaking with someone. The discussions are still going on. They made excellent progress and we are talking about the last few issues," end of quote. The IMF stated that Egypt needed to make decisive progress on fiscal and structural reform as part of an examination of a $5.2 billion standby agreement reached with Egypt in 2020. And so joining me from Kenya is Professor N Iraki, and we will be looking at this issue on all fronts. Thank you so much, Doctor, for joining us on Business Edge.
Thank you, and good afternoon again.
All right, now Egypt is seeking a new extended facility from the IMF. Why is that so, and what is he hoping to achieve?
It's interesting that what Egypt is doing is exactly what Kenya is doing. We're also getting some money from IMF to support our budget, support our economic growth. And Egypt is probably borrowing money from IMF because they need some money to jumpstart the economy. A lot of economy has suffered because of COVID-19 and because of the war in Ukraine. And I believe those are the two main reasons why Egypt is borrowing money from IMF.
All right, now, looking at the issue, Egypt's Finance Minister Mohamed Maid said that the country and the IMF were close to coming to an end of their talks for the new $5.2 billion facility, but that they were ironing out the final point. So what subjects are there that they need to discuss?
Traditionally, any time you negotiate with IMF, they usually give you certain conditions. I've seen that in Kenya. I've seen that in a number of countries. So I believe at the end of the discussion, Egypt will be given certain conditions that they must fulfill before they get that money. Some of them are monetary conditions, others are fiscal policies, but I'm sure there will be a list of conditions. Some of them might be stringent, some of them might be easy to fulfill. But at the end of the day, they will negotiate and agree on the specific conditions.
Now, one of the IMF's concerns about Egypt's economy is the country's vulnerability from a high public debt burden and large gross financial requirements. So is the IMF actually right to be concerned about the dealings?
I think IMF's concern is justified because if you look at the last few years, Egypt has been getting debt, just like Kenya and quite a number of countries. And I think the IMF might be feeling that the debt might become unsustainable in future. So they must come up with ways and means of making sure that the country is able to pay debt and is able to cover other obligations like paying salaries and financing the development projects. So I think it is legitimate that debt is a concern, not just in Egypt, but quite a number of African countries, including Kenya.
In a view of a $5.2 billion standby arrangement agreed with Egypt in 2020, the IMF said the country needs to make more progress on fiscal and structural reform. So what do they mean by this?
When you talk of physical reforms, we are talking of areas like taxation and how the government gets its revenues and how the government funds its projects. It's mostly targeting taxes. Are there some taxes that need to be consolidated? Are there some taxes that need to be reformed? Are there some taxes that need to be raised? Are there some goods and services that are not taxed and should be taxed? So physical reform is more about how the government raises its taxes and how the government uses that money. And I'm sure every time IMF comes in, they usually discuss the government on some of the physical changes. Structural reform is more about how the economy operates, the productive side of the economy. For example, do you need to deregulate some industries so that there's more competition? Are you likely to give subsidies to some industries? Are you supposed to reduce total subsidies? Are you supposed to inject more innovation and more competition? So when you talk about structural reform, it's about looking how the economy operates and how it can be made more efficient.
All right, finally, Dr. Iraki, now Egypt's economy is estimated to grow by about 5% this year. According to some people, they consider it as being on a high side considering the headwinds in the global economy. So what are the drivers of this economic growth?
I think if you look at Egypt in the last few years, Egypt was having a lot of economic problems, particularly when the government was taken over by the military. But I think that has stabilized, and I think we are seeing the dividends of that particular stability in Egypt. If you look at the trade regimes, Egypt has also been doing a lot of trade, a lot of expansion. I've seen some Egyptian companies in Kenya and other parts of the world. So that global expansion, that stability at home, is what is driving Egyptian economic growth. Never mind that they have to worry about the war in Ukraine and COVID-19 at the same time. But the prospects look bright.
All right, thank you so much, Dr. Iraki, for joining us on this part of the discussion. Well, definitely we'll continue to monitor proceedings between IMF and Egypt on this sort of restructuring and agreement that they are trying to put together. And definitely we continue to bring you updates on that. But then let's quickly go on a break. We still have more for you on Business Edge.
Business and industry leaders have put pressure on the Reserve Bank of Zimbabwe to remove early backlogs from foreign currency auctions in order to ensure market stability. The pressure from business is a result of the central bank allegedly releasing funds for June allocations while ignoring the backlog for the first 5 months of the year. Now, joining me from Harare, Zimbabwe, is Denford Mutashu. He's the President, Confederation of Zimbabwean Retailers. Denford, welcome again to Business Edge. Thank you so much for joining me.
Thank you for having me.
So we know that business leaders have spoken to the Reserve Bank, and of course there have been a number of meetings in recent times. But it was as a surprise to many that the bank decided to clear out those who came last rather than those who had been basically on the queue in recent times. So what do you think the bank's rationale was in getting to those who have not been waiting so long?
I think the auction market is modeled around supply of foreign currency available, and it uses the allocation nature in terms of identifying the key productive sectors that will be requiring foreign currency at any particular time. And the focus largely has been on the manufacturing sector, the distribution sector, mining and agriculture, especially towards providing support for the importation of raw materials and capital goods. So the delay, according to the Reserve Bank, has largely been due to the huge demand of foreign currency that has happened owing to the growing economy, and the demand has surged. And it has also been due to the measures that have been put in place in order to stop business from buying foreign currency from the parallel market that has also been alluded to previously as a reason that has been driving the parallel market exchange rate, and that has actually also been driving prices, especially of key basic commodities across.
So we know that Zimbabwe has a willing buyer, willing seller system for purchasing of foreign exchange. And some have said that this system is a bit too rigid and actually needs deregulation, and instead that Zimbabwe should flip to a willing seller, willing buyer sort of system. What do you make of this system that's in play now? Has it made things more difficult for people, or is it still working?
I think the interbank exchange rate is set to work, especially if it converges with the auction market exchange rate, and also with the parallel market exchange rate. And that can only happen if it is market driven. A lot of business leaders in the meeting that we were part of, which was called by the Financial Intelligence Unit of the Reserve Bank of Zimbabwe, alluded to the fact that there is need for a total liberalization of the exchange rate, so that the willing buyer, willing seller model that is currently obtaining, which has seen more buyers, sellers, is actually is good.
Hello, Denford. Okay, seems to be a technical issue there with our last guest, Denford Mutashu, who is the president of the Confederation of Zimbabwean Retailers. Denford, I do believe you're back before we wrap things up. Denford. Okay, there we go.
Yes, I can hear you.
Okay, so please just go ahead and finish that answer. I have one more question for you before we wrap things up.
Yeah. So the current call is for creation of a willing seller, willing buyer, because there are more buyers than sellers on the market. And that has been reflected by sellers not willing to release the foreign currency that they are holding with various banks because they are not happy with the price. So it is the reason why there was a clarion call by business to ensure that instead of the prevailing environment, we need to have more liberalization on the exchange rate so that sellers can willingly release the foreign currency that they hold.
All right, so I'll quickly ask you this because unfortunately time is not with us now. We know that Zimbabwe has finally started selling the gold coins. We talked about this policy when it came about that Zimbabwe is going to go down this route. And the idea was to curb inflation and also to help stabilize the spiraling currency. It's in its early days, but given the fact that the Reserve Bank of Zimbabwe's exchange rate system has been accused of creating arbitrage, do you think that these gold coins can help in the next few weeks? We'll see some kind of difference in the next few weeks coming from the introduction of the gold coins.
I think we needed some competition to the demand for US dollars as a storage of value, and the gold coins are going to provide that solace where a lot of people have been running away from the local currency in terms of it failing to perform that particular role. And since the introduction, we have seen an uptick of the gold coins because a lot of people have got confidence in the gold coins because they are actually can be used as a function of transacting across the economy and even beyond the borders. So I think a lot of people are developing confidence on the gold coins. And indeed, the focus which government and business agreed in how that meeting is aligned in terms of us attaining stability in terms of inflation, the exchange rate, as well as pricing.
All right, Denford, we'll have to end the conversation there for today. But of course, we're following developments in Zimbabwe very closely. So we look forward to talking to you very soon.
Thank you for having me.
All right, thank you, Denford. And of course, it's a situation where no one wants. Zimbabwe right now is facing high inflation, around 192%. Food costs have more than tripled. And there's the rapidly devaluing local currency. And of course, 90% unemployment and declining manufacturing and production output. Tough measures are required. But Zimbabwe has been trying some out-of-the-box things. And we'll be following very closely to see how those things work out. You're watching Business Edge. We'll be wrapping things up with NC4 to watch. Stick around. And now a few stories that we're keeping our eyes on. According to the annual bulletin of foreign exchange data released by the Central Agency for Public Mobilization and Statistics on July 28th, Egypt's total foreign exchange receipts for the fiscal year 2020 and 2021 were $126.7 billion, down 1.7% from $128.9 billion in the financial year 2019-2020. British International Investment PLC aims to invest some $60 billion in Africa over the coming 5 years. The investments will be made in several fields, including renewable power and digital infrastructure, along with supporting women-owned businesses. In order to reduce rolling blackouts, Eskom, the state-owned electricity provider in South Africa, is attempting to displace Zimbabwe as a buyer of electricity from Mozambique and Zambia. According to Sydney Gata, the chairman of Zimbabwe's Zesta Holdings Limited, Zimbabwe's contracts with the power provider in Mozambique and Zesco in Zambia are scheduled to expire at the end of next month. He said that Zimbabwe is not paying Zambia's monthly import bill of $6.3 million. And finally, Zimbabwe's Finance and Economic Development Minister, Mthuli Nkubi, has revised the GDP growth projections to 4.6% this year from the initial 5.5% attributed to external global developments and Zimbabwe's unique circumstances. In his midterm fiscal policy review statement, He said that the domestic economy has not been insulated from global developments, particularly from rising commodity prices and inflation, as well as disruptions on supply chains. And that's how we wrap things up right here on Business Edge. Don't forget to follow us on social media. We are at News Central TV. You can subscribe to our YouTube channel, download our mobile app, and of course, watch us on the platforms we are available. Until next time, I'm Tolulope Adeleru-Balogun. Do have a fantastic weekend.